Should I be scared of inflation or maybe hyperinflation? Yes, maybe not today. And how do you invest around it? So this is Brian Lewis with MMT Investing, and things just changed. So inflation. Here's the basic picture that I have looking at inflation. Uh, so we're in a massive credit contraction right now. Um, So this is deflationary. I mean, worldwide money supply is being destroyed right now. People are losing money, banks are losing loans, defaulting. Um, so I mean, like in the next 2 months, like definitely no, we're not getting inflation during the crash. And then I have this outlook for the for a longer term bear market here for the next few years, and that is also deflationary. This down market will be a little bit deflationary. And I'm sure the Fed is going to be pumping out money left and right. And if they go to like MMT or universal basic income or something like that's definitely going to be inflationary. Uh, but I would think that inflation will become really scary after this. Once we start going back up, um, then there's no deflationary pressures. And if the dollar starts trending away from being the world reserve currency, if Bitcoin starts getting picked up as a currency that people use outside of the dollar, or if the major countries in Europe and Asia uh, that have stockpiled all of this gold start coming out with gold currencies or gold-backed government currencies that they're using to trade outside of the dollar. They've been trying to do this for years, and the United States has been able to keep the dollar as the oil currency, as the world banking currency. Um, but now that could start to shift. So once we get out of this down market, and if America starts having competing currencies for world reserve currency status, then inflation can get really scary um, because all of those overseas dollars could come back to America and just drive domestic inflation. And America's debt burden, when they don't have the rest of the entire world watering down. Like, I mean, I used to think that maybe 50% of all the dollars were offshore, but like the numbers that are coming out now that aren't in fact that aren't affecting inflation that much. I mean, it looks like maybe 90% of all the dollars in existence are offshore, and I mean they can pump trillions of dollars of of like bank liquidity out, and it's not even enough to to like make the banks solvent. Yeah, it's absolutely crazy, the amount of dollars that exist, and nobody even knows what that amount is because they've been loaning out dollars with this international banking system, the euro dollar system, and the Fed doesn't know how much how much currency there is. So I mean, they're just kind of shooting shots in the dark when they're doing this quantitative easing and just seeing what happens and just trying to send it to the right place. I mean, a little bit of a mess. So yeah, as far as inflation goes, maybe four phases here. Phase one, the crash. No, like deflation is a worry in the crash, not inflation. And then this kind of bear market period here, if this plays out, would be counter-inflationary. So I'd probably be able to keep like the same kind of destroy 3% of the dollar's value every year kind of situation. They could probably keep that going here. Then when this reverses, inflation could start ramping, and then the fourth phase, if competing currencies start taking away the US dollar's world reserve status, is really when dollar inflation could get out of control and you could get hyperinflation. Um, so I think that's kind of the inflation outlook is it's a long-term kind of fear and not really a short-term one. Um, so I mean, as far as an investment play against inflation, there's there's a couple of plays. So I mean, maybe like here at the bottom of the crash, you could look at dividend stocks because dividend stocks will go up with inflation, and the dividends will probably go up with inflation. And then once we get out here and we have a real crash. So yeah, I think like here probably dividend stocks and gold obviously is a good inflation hedge. Here probably gold will be a great buy, and dividend stocks like coal or something like that would be a good buy. And then once you get out into this long-term bear market, I think silver will draw down. I think gold will drive up in this bear market. And once we get here, I think silver will be at a bottom. I think housing will be at a bottom. I think a lot of dividend stocks will be at a bottom. Uh, so those are all really good things to hold. And then gold should still be good here too. So out here, like 3 years out, I think dividend stocks, gold, silver, and rental real estate are all excellent inflation hedges right here before we get into the inflationary period from this model if this plays out. And here, I think gold and maybe some commodity dividend stocks that are down. Um, yeah, so not all dividend stocks. I mean, oil dividend stocks may be really low here. That might be good, or coal. Um, yeah, so those are some plays if you're thinking about hedging against inflation. Um, I know people always say that gold is the best inflation hedge and stuff like that, which I don't know if that's necessarily true. I mean, I think gold is just really tricky because it's a political metal. Like governments use it as currency, so you just don't know what the governments are going to do. I mean, I think there's a lot of risk in gold. I also think that the gold price is not historically low right now, and I also think that gold might be going into like a hype bubble. Like I think gold is starting to get hyped up like Bitcoin was a few years ago. And I think we might see a bubble in gold. So I think gold is an interesting like speculative like investment right now, more so than the traditional idea of like an insurance sort of investment or just like a stable sound money kind of investment. But I do like gold, but not for the same reasons as anyone else. I think gold's a very speculative, good play um, in the market, and what I'm thinking about for gold right now, because there's only two things. Like we're right here in this bull trap. So we came down off the everything bubble. We back tested 2018 crash. Now we're back testing the 2008 financial crisis crash, and it looks like we're about to reverse down here. So I'm going short tech for the most part here. And then I think that gold as a short-term play on these upswings during the crash is going to be the best thing that you can do because gold is rallying off of these crashes like crazy because gold's getting drawn down with the crash because of margin calls, and then it's just rallying like crazy up off of these crashes. So if you alternate on the way down here, short tech and then long gold and then short tech and then long gold out here, I mean, I think that's going to be an excellent play. And then yeah, if we get into this long-term bear market situation, you just have that's a little too far out. I mean, let's just see what happens. So, oh, I want to get to the 10-minute mark here. I'm very close. That's a good mark to get. So this is not trading advice, just general ideas, and please smash the like button to help me with the YouTube algorithm, and subscribe if you like. Happy trading.